What is up, everybody? Happy Wednesday. It's hump day. You know what that means. One of our favorite days here at the BenZinga office. And hey, look, we're absolutely ripping today. We talked about the CPI print yesterday on the show and exactly what we would have to see for the market to respond positively to that. I said we would have to see a significant amount lower than what the expectations were. I wouldn't necessarily say the 8.5 that we got was that much significantly lower than the 8.7. But when you dig into the report, there are some very positive things in the report, and we will get into that a little bit as well. We will get into, of course, big news yesterday. We had Coinbase report after the hours, giving us some insights into the kind of overall crypto market, especially see how Coinbase is doing as still one of the biggest exchanges in the world. And then, of course, Elon Musk selling some more Tesla shares. He said he's done selling. He said that in April, too. He's always done selling until, well, anyone can say they're done selling until the next sale, right? And then you can say, hey, I'm done. I'm not doing it anymore. And then you do it again. And you say, oh, hey, I'm done. I'm not doing it anymore. So we'll talk about that. Crypto party lords saying crypto is performing really well today. We'll check out which coins are moving, which coins we want to look at. As always, if you've got stocks or trades you want to check out, drop them in the chat. Guests for the day, I see Nicholas Brown hanging out. Nick will be joining us at 12:15 to see what he's been watching. And then we will also have Jason from TrendSpider, Jason Krutzky, at around here in about 15 minutes. So we'll run through some charts with Jason. We'll get TrendSpider on, but before we get into it, let's go ahead, roll that intro. We do have some exciting show news. I know, we've gotten some comments in the past couple weeks. You guys need a new intro. Spencer's still in it. Spencer is obviously not here. Well, he is here. He's right behind me. Right there. But we are going to get a new intro updated soon. So I'm going to play the old one. Okay. But just know we're getting a new one.
This is BenZinga Live. Spencer Israel and producer AB. What's up, everybody? How we doing?
Someone told me buy high, sell higher.
Let's get Matt Hammond on the show to talk some IPOs. Jake Wojacek from TrendSpider. We have a breaking news.
All right, guys. Let's go ahead and get my BenZinga Pro pulled up. Let's rip through the different indices, see how the overall market's doing. Also ripping through. Look at the Qs. We're on a 5-minute chart here, approaching highs of the day. You can see here on the opening candle, this isn't the opening candle. This is from 8:30 in the morning, right when that number came out. Right when we got that CPI number, we reached highs of 325.38. We are approaching those pre-market highs right now. We did get up to 325.08. So keep watching here. If we're able to clear that high from the morning, then maybe we run a little bit more in the afternoon. I wouldn't want to get in and be short here. Like, I think maybe you could look at this, and if we go to a daily chart, you can think, okay, look, we've gone up now, a decent amount from our lows. I'm going to buy some puts, and we're going to come down. But I think there's a lot of I saw yesterday that the short interest on the S&P is at its highest point in like 2 years. And I'm really not understanding why. Like, I understand there's data out there and things that people are pointing out that show, hey, that show, hey, maybe the economy is slowing down, whatever. But it's like, okay, but you have to realize if, even if those things are true, or even if what you're looking at that's making you bearish is true, that's probably already been priced in, right? That was probably getting priced in. Maybe you're thinking about it now, but the market was thinking about it here when we were going down 20%. All these things, elevated inflation, supply chain issues, these were getting priced in. This is what caused us to come down from on the Qs at least, from 400 down to 268. That's a big move. That's a 30% move from 400 to 268. And a lot of these negative things were getting priced in, right? Whether we're talking about inflation, whether we're talking about, and one of the things that was also getting priced in, around here, as we were heading into earnings season, a lot of investors and a lot of people were anticipating across the board, bad earnings, misses, lower guidance. And we certainly got that to some degree. We certainly got companies, reporting quarters that weren't as great as previous quarters, but for the most part, most companies still beat expectations. And then, of course, in the past couple of weeks, we've gotten a few catalysts from the legislature side, from the government side. Whether you're talking about the IRA, the Inflation Reduction Act, or the CHIPS Act, which either way, politics aside, break down the bills however you want, say you hate them, say you love them. What they are both doing is providing money and investment to these American companies that comprise the stock market. So if the government's passing a bill to invest into these companies that comprise, the S&P 500 and the Qs, not every single one of them, of course, but namely the CHIPS bill for the semiconductor, the NVIDIAs and stuff, it's like those are bullish catalysts. We won't see the companies won't get those effects, won't see those positive impacts for a while, but those are still something that the market's going to view positively. Let's go check out the VIX. I mean, just absolutely getting crushed. I know people, are buying calls on the VIX thinking we got to come down more here. We got to whatever. I don't know. I mean, look, again, I don't have a crystal ball. I've said it before. I'll say it again. I don't know. Like, to me, what I'm seeing, how I'm understanding this price action, we'll go back to the SPY, we'll look at it on a daily, is basically what I was talking about earlier. Like, I don't know if, things will continue to be a little bit slower. Sure, maybe we don't rip up and get back to previous all-time highs in the next few months. I could foresee us kind of chopping around. I don't really foresee us coming down and retesting these lows or breaking through. So I don't know. I mean, I see Easy Mike in the chat saying selling everything. I don't know if that just means what he was playing today. Did CHIPS have an oversight committee? I want to see the itemized breakdown of the $52 billion. Yeah, we also need to talk about the new the investment going into the IRS. I've seen a lot of people on Twitter talking about that, and really just this debate is still ongoing on Twitter about just what's going on with the market. I think people that have been bearish are getting a little. I mean, obviously, a lot of bears now have had it covered. They're starting to realize, hey, maybe we're not as bad as a lot of things seem. But I've been seeing on Twitter, and I'll get this pulled up. People it's like, I don't know how in this environment, right? If you're looking at data, and if you're staying open-minded, being able to look at data as it's coming in. Sure, maybe a couple months ago there was data indicating that we're heading toward a recession. Whether you were looking at yield curves, whether you were looking at, there were a lot of different things that people were pointing out, saying, okay, we're heading toward a recession. Obviously, the negative GDP, 2 consecutive quarters. But if you look at data as ongoing, kind of in real time. If you take just July, for example, if you look at the jobs data, right, we added 500,000 jobs. Wage growth grew, and that scared a lot of people last Friday. If you guys remember, when the non-farms payroll came out pre-market, and it was a lot stronger than people anticipated, the markets actually came down. And you might wonder, like, why would the markets come down on a jobs report that's showing that the economy is strong? And it's because people saw the wage growth and they thought, okay, that means we haven't slowed down inflation. You can't slow down inflation if wages are growing, if companies are still hiring, if jobs are still growing. And that means the Fed will have to, raise rates. We looked at the odds of a 75 basis point hike on Friday jumped up. Well, today they jumped down because that expectation was we weren't going to have inflation coming down if you had job growth and wage growth. But we did. We did have inflation come down month over month. And so, if you're looking at the data, like I said, in real time, and you see that in July, we had inflation, we had zero inflation and added 500,000 jobs, and you're going to tell me that is indicative of a recession, that points to a recession to you, I'm going to say you're not looking at the data. You're going off how you're feeling. You're feeling oh, we can't possibly go up from here. The markets can't possibly be this good. The economy's not that good. We're in a recession. And it's like, that's what I've been saying this whole time. Like, just because people feel that way doesn't mean that it's necessarily backed up by numbers. I know anecdotally, like from what I've seen traveling and from what I've seen consumer habits from, my colleagues, my friends, whatever, it's like nothing has changed. If that was a recession, or if we're in a recession right now, this is the weakest recession I've ever seen. Because I'm 25, I'm not, making a bunch of money or whatever. And it's not like I'm like cutting it's like I'm still going out and have, it's like we go out to the bars, whatever, packed. Like we're walking around saying, why are you out right now? Isn't there supposed to be a recession? Everywhere's packed. Try to get, you get on a plane, packed. Reservations, restaurants, packed. We talked about last weekend. I was joking about it kind of, but it is true. Like, Busch Stadium, I'm a big Cardinals fan from St. Louis, set the record for most fans in the stadium last weekend. That includes World Series games. That includes the All-Star game in St. Louis. That's not conclusive. That's not, that doesn't add up to the recession argument that we're breaking record attendance numbers at ballparks. And it's like, again, I'm not saying there isn't things out there. I'm not saying every single data point is showing that our economy is firing on all cylinders. Productivity, definitely one of the things been looking at that's been lacking. But again, if you're out here saying we're in a recession or calling for a recession with the data points that we're getting right now, I would argue you're going more off feelings than those data points than the stats. Falcon's asking what do I think about gold and silver? So and it sounds like I don't know if you're long gold and silver. More power to whatever. I'm gold bugs or gold bulls, whatever you want to say, probably won't like what I have to say. But my point for the longest time has always been if the argument is you want to buy gold for safety, I just think there are other things I would buy for that. And then as far as for actual alpha, for actual return, again, there are things I would buy instead of gold. Like gold's not that interesting to me, honestly. Silver, I actually, if I had to buy gold or silver right now, I would buy silver. But I've just never been, there are so many different investment opportunities out there. Even outside the stock market, right? But even if we're just talking about stocks, right? There are so many companies that are doing cool things, innovative, growing companies. And it's just I'd rather try to find one of those and invest in one of those than gold. And I think historically, especially over the last 30, 40 years, you're way better off being invested in stocks than gold. And it's always kind of rubbed me the wrong way that I feel like a lot of, and it goes the same way with Bitcoin too, right? Because a lot of times the people that are very bullish gold or Bitcoin, and obviously there are big differences between the two groups, but there are similarities too, where for the longest time, right, it's you got to buy Bitcoin for the inflation hedge. You got to buy gold for the inflation hedge. We're printing so much money. The dollar's going to zero. The US dollar is really worthless. And it's I'm not going to, if you're trying to tell me that the US dollar's worthless and that's or going to be worthless and that's why I should buy it, it's you just lost all credibility to me right there. Try to convince me on an investment opportunity without saying the whole system's gonna collapse and it's doom and gloom. And that's why Peter Schiff, and we've had him on the show before, and I kind of poked fun at him for this. It was actually really funny timing wise because I think it was it was 2021 in the spring, in March. So this was more than a year ago at this point. This was 14 months ago or something. And he was doing his usual gold shtick, talking about how you got to buy gold, inflation's out of control, whatever. And it was funny because I was talking to him and I'm like, you keep tweeting about inflation this, inflation that, you got to buy gold. And at the time, we hadn't had any actual meaningful inflation shown in CPI. And so I asked him that. I was like, you look at CPI, it's fine. What are you talking about? All this inflation, you got to buy gold. And he goes off about how the CPI is massaged, it's fake, the government doesn't want you to know how much real inflation there is, all this shit. And then literally, I kid you not, timing-wise, the next week or maybe the next day even was when we got the first CPI report saying that inflation jumped up to 5% in March year over year, whatever it was. It was the first CPI report that showed significant inflation. And then he's tweeting all about it saying, see, I told you the CPI was high. It was like, wait, you were literally just saying this number was fake, did not matter 2 days ago. So I think, between people that are very bullish gold and very bullish Bitcoin, I mean, or if you're bullish any stock, right? You have an intrinsic bias, you have blinders up to certain things. So maybe, yeah, if you have $100,000 invested in gold, maybe you really do think it's the US dollar is exactly such as the confirmation bias. Right? If you have $100,000 in gold, maybe you think the US dollar really is meaningless and the inflation is out of control, whatever. But if you're holding more cash, you think, hey, my cash is fine. Right, the U.S. dollar is backed by the biggest, the richest country in the world with the biggest military. It's like, I don't know how, right? And then at that point, like, if the dollar does collapse and goes to zero, I don't know. We'll have bigger problems. Like, I don't know how much gold will help me then. I guess probably it would. I don't know. Either way, I think there's a lot of confirmation bias going on there, and I think it's also one of those things where, with especially on the Bitcoin side, like the Bitcoin bugs. That for how long did we hear, inflation hedge, like you got to buy Bitcoin, the real dollar has no value. And it's like, it loses its argument over the time. And then I think what happened was because, Bitcoin and crypto, very, very central to Silicon Valley for like many, many years, you kind of have that effect where you have these like different, really successful, really smart people in tech that are making a lot of money. Maybe they're developers at Facebook or Apple or whatever, and they get into crypto because it's all happening in Silicon Valley. And then now all of a sudden they're like economic experts or they're market experts, right? Because they're really smart in tech. Now they think, no, Richard, I think the exact same argument goes for Bitcoin, right? Like I think people that's what I'm saying right now is I think you had a lot of these like tech people who were really smart and seen as like geniuses promoting Bitcoin and then they had their confirmation bias because they were early investors in Bitcoin, holding it from like $100 saying, yeah, this technology can change the world. You need to buy it. The US dollar is going to zero when they really don't understand economics at all. I'm not even saying I do. I'm just saying I know that, saying the dollar is going to zero, buy this with no real data to back it up isn't really, a good enough sell to me, I'll say. All right, guys, I do see our first guest hanging out in the background. We've got Jason Krutzky coming on from TrendSpider. Excited to get him on. We'll be running through some charts. So as always, if you've got any stocks, any trades you're looking at, feel free to drop them in the chat and we'll go ahead and take a look. So without further ado, let's go ahead and roll our special guest intro. Bring Jason on the stream. Jason, how we doing today?
What's up, Aaron? Doing good, man. How are you?
Chilling. Cannot complain.
Awesome, dude. I apologize again for missing our hangout time on Monday. Glad to be here now.
Oh no, you're fine. And trust me, I know nothing was ever like actually scheduled. Jake had just mentioned like, oh, hit Jason up. I emailed you, and obviously I emailed you like an hour before the show or something. So it's no worries on your part. Everything works out, so all good.
Right on. What are you trading today?
I haven't really been that active trading. I bought some cheap QQQ calls yesterday before the close.
Oh, nice.
I think what was it? I forget what. I think we were talking about an earnings trade last time we were on that I missed on, but
I'm not sure.
I forget. I'll find it because I know we were tweeting about it. Or maybe it was Q call. It was before some. I don't think it was a full month ago. I don't think it was before the last CPI. But either way, I was actually surprised because I was basically what I was saying yesterday was I thought we were gonna have to see the number be even lower than 8.5 to like get the market ripping like that.
Right.
Just because the expectation was already that inflation was gonna come down month over month. So now like once the expectation's set that okay, things are getting better, now you have to prove that like not only are things getting better, that's already the expectation, but they're getting better than we even thought.
Right.
And so I was thinking like, okay, maybe in like the 8.3 to 8.4 range we rip, anything in line, 8.7, 8.6, 8.5, maybe it's kind of steady. But even with the 8.5, which again beat expectations, but not by that much, there were some really good things when you dug through it and looked into it, looking into the core, even when you take out gas and food. So things like that. I don't know how much you were actually looking at the CPI or just looking at the price action, how things were moving based on it.
Yeah, more so looking at price action.
Yeah.
I'm a price action guy. I'm not a news guy. But what I don't understand, maybe you can explain it to me. Like, why would you take food and gas out of the number? We're all paying for food still. We're all paying for gas still. Why is that?
So it's just because the gas and energy, the fuel prices and food are more volatile than the other assets. So in certain times, take something example like the Russia-Ukraine thing. Say that happened in a vacuum, like we had a lot of inflation going into that because of supply chain issues, whatever. Like inflation was already an issue going into that. But say we were perfect, there was no inflation, and then that happened, and it was going on for a couple months, and fuel prices and because of the wheat and stuff, food prices ran up a little bit. That wouldn't really be a great measure of inflation because it's more of a measure of like, okay, there are some supply issue. Basically in that scenario, other things, electronics, furniture, would still be the same. It would just be those, two main things, food and gas. So some economists just think it's a more true, actual data point on like how far the dollar's going if you take those two things out. But like you said, at the end of the day, those are like the two things people pay for the most. So that should be what we care about. That should be what we care about the most, not what we care about the least. So
just goes to show like how important is news. News always comes at these pivotal levels with price action, and price action tends to react it tends to react how it should based off of where it is and where it's come from. News is just the catalyst to make it have that reaction.
Yeah, and I think that point you just brought up is something that's so interesting that doesn't I notice it, but I don't think about it a lot, and I feel like a lot of people also don't think about it. Like it seems like it just so happens that all the time, like you said, you'll have these important news catalysts while the indices are like sitting on these important technical levels, and you're like, is this a coincidence? Probably not.
Right. I mean, Tesla's a pretty decent example. That 850 level was pretty important, and the news was terrible, right? Or allegedly terrible. Elon Musk selling shares, or selling a lot of shares.
Yeah.
But it bounced off of a pretty important level, kind of where you would, if you're looking at price action, kind of where you would think it would bounce, kind of where you would have your bids around that 850. So, he was selling, I don't know when he was selling. He was selling probably quite before the news announcement came out, at least a couple of days.
His first was on August 5th. I believe there was August 5th, 6th, and 7th or something. So a few different days.
Interesting. Right on. So he's kind of sold the top. Who knows? I mean, it'd be interesting to know if he bought today.
I saw something saying, like, I guess last week he was telling investors like, buy the dip. This is a great opportunity, literally while he was selling. So I don't know if you want to pull up a screen, but you are able to if we want to look at some nice looking good TrendSpider charts.
Yeah, let me share here. Yeah.
All right. There we go.
So that's what I was kind of looking at. I mean, I've had this drawn on my chart for kind of a second now, kind of just looking at where it broke out and never came back. And well, came right back to it. Also pretty close to anchored VWAP from the most near-term important low, I guess. It's a good spot. They came back and they tested. Let me just remove all this stuff. It's easier to see it when I do it one at a time. Like they came back and they tested this, right? You had this big kind of consolidation accumulation area. They came back, they extended, came back, tested, and then you extend, you come back and you test and you hold. I mean, it's textbook if you're price action trader.
Yeah, I mean, I think too, Tesla today is one of those weird cases where you have kind of that negative catalyst that we got yesterday, and then of course Tesla's like the prime example of a type of stock that's going to benefit from the lower inflation thing. And then you've got those two forces kind of battling, and you're seeing today, the bulls are winning. The bulls are saying, hey, we don't care. Elon's selling shares. He messed up because his stock's still going up and inflation's going down. But, I think it's just going back to that point of like, hey, It seems like more often than not, these news catalysts that move the stock happen while the charts are at, and it's kind of like one of those chicken or the egg situations, which causing which. But yeah, I'm seeing Hunter asking, is the market bottom in after today? I don't know if I don't know if you're referring to the market bottom of June. Or if you're saying like, will this be the new, I don't know, but I don't know. I'd be surprised, at least in like the short to medium term, if we go back and test those low. I mean, we'd have to have some big problems arise.
I mean, I don't know if the market's bottomed.
Oh, looks like we lost.
Not anytime soon.
I think we lost you there for a second, Jason. We lost you right after. You don't think the market's bottomed? That's where you left.
No. I'm saying I'm not the type of guy that's going to make the assumption that it has or it hasn't. I'm just kind of looking for price to kind of do what price is going to do. If price keeps on gaining pivotal key highs, meaning we get above, we make new highs. We're making new highs. If we keep making higher lows, which is kind of what we've been doing since June, we're making higher lows. We're in an uptrend for now. I mean, we are in a bigger term, I guess, macro downtrend. But, for now, things are looking pretty good. We want to see today's Wednesday, right? We want to see Monday's high get gained. That's kind of the next thing we want to see for bullish. So you got I'm just on the cues here. We could talk about anything, but like 326.55, pretty important. We want to gain that. If we can gain that, then we're looking at 330. If we can gain 330 and get up into this stuff, I wouldn't be shocked to see a pullback. I mean, there is still kind of some stuff that we haven't done. You kind of have this area in here that really price hasn't quite come back to. I could see it coming back at some point. I'm sure that a lot of people are going to point to the gap up today. Like the gap up needs to fill sooner than later, but that's not necessarily true. I mean, we got a gap down here at 287, hasn't filled yet. This came on July 15th, right? So like this could continue extending for some time. I'm not saying that it's gonna. You've got your anchored VWAP from your all-time high at 336. To me, this would be pretty logical. Like it would be pretty logical for price to come up in here. It would take out these highs. If we take out these highs, then we're getting into exhaustion risk. You know that you have a bunch of stops right here, right? You know you have a bunch of people who are short who have stops up here around 331. Well, it would make a lot of sense for price to come up, take out all those stops, and then reverse and back test. So that's kind of what I'm looking for. That the Qs were able to gain this little distribution area from when was this? This is in early June. They gained it, they pulled back to it, tested it, and gained again, and then they even pulled back and tested this. So like to me, the only thing that hasn't really been done is kind of somewhere in here, kind of off of the anchor VWAP from the lows. So that's kind of where my head would be at. Over time, maybe we gain 331, maybe even run up into 335, somewhere like that, 330, 340 even. And then maybe see a pullback, and then we'll start watching, if you're wanting to know if the lows are in, you're going to want to see these lows hold, right? If these lows don't hold, then that's going to give you a big clue as to whether or not the bottom is in. I'd be watching this one in particular. I mean, these three are pretty tight in with one another, but this one's kind of an outlier. So it'll be interesting to see if they do pull it back. Do they end up holding it? Do they end up taking out the low? Do they make a lower low off of this? I've just become so used to like market makers being so tricky. And right when you think everything's in the clear, everything's going to be a-okay, that's when they kind of pull the rug on you. So that's why I say if we start gaining these highs that we're kind of clearly trying to work our way up to, this was a pivotal level back in April. If we can gain those, well, okay, so we've made a new high off of those April highs, but generally what will what I would expect is I would expect them to knock it back down and test lower if they make this new high, which is counterintuitive, right? A lot of people might be waiting for this new high to be made so that they can go long. And I think that's, that's kind of the nature of this thing, right? Is it's always max pain. So if you have a bunch of people who are short and have this as their stop, and you have a bunch of longs who are saying, I'm going to get long if we can gain this high, what a great time to gain it and turn it back,
Yeah, and I think about that a lot too, is just thinking about because like you said, it's like it'd be great if this was as easy as looking at this chart going up, saying I'm going to buy this, or this chart's going down, I'm going to short this, and everyone makes a lot of money and no one loses money, everyone's happy. It doesn't work like that, right? And so like you said, like trying to foresee, trying to like visualize essentially what that max pain scenario will look like, I think is sometimes really helpful as a trader, because like a lot of times it ends up happening exactly what that max pain scenario looks like. And when you're talking about how right now, it'd be one thing from what I'm seeing, I did see yesterday that the S&P short interest is at its highest point since like 2020, and it's still not that high. It's like 2.5%. It's like there's still 50 times more money long the S&P 500 than short. But I don't think right now it's really like we're in that euphoric stage. Everyone's super long and everyone's buying in. If anything, it's the opposite, where people are short, and it's like and that's why I like at the beginning, Jason, what you said when we were talking about is the bottom end. You're like, hey, I'm just gonna watch the price move. Like that's what I've been doing. It's like people are asking me. It's like, I don't know. We've been going up, so we'll probably keep going up until we're not going up anymore.
Look for failures. Look for failures either to the upside or to the downside. When I say failure, I mean look for price trading above a previous important high or below a previous important low. Don't expect that price is just going to keep going lower once it makes that new low, or price is going to keep going higher once it makes that new high. Generally, what's going to happen is you're going to reverse, and you're going to go lower if you make a new high, or you're going to go higher if you make a new low. But if you make those new pivotal highs or lows, that sets up the expectation for continuation into more new highs or more new lows.
Yeah, and I mean, like I think a lot of bears out there right now, or people that are still short, are looking at this saying, "Oh, everyone's been coming in buying, like whatever." Like they might think, everyone's super long right now, euphoric, but it's like from what I've seen, I still see people. Especially retail, seemingly like pretty short right now. And so like you said, that max pain is maybe squeezing out those people that are still short. And then we get to the point where then you get that euphoric state where people start FOMO buying and saying, okay, now we're finally in the clear. NASDAQ's up 30% from its lows. Start buying. Then you get that pullback.
Yep. That's kind of what I'm thinking. I mean, I was talking about this on Monday on my stream. SPY has been stuck below that early June distribution area. Q's gained it a while ago. IWM gained it a while ago too. We would put it right here, right? Like SPY's been the laggard. So now SPY is trading up and over. So I kind of feel like SPY's got some room to really make a move. And maybe that means that the Qs or IWM cool off. But what I kind of more would suspect is that everything just continues. And again, looking for that same area right up in here as a potential level of interest when and if it comes. And we do have SPY's kind of interesting too. SPY's coming in anchored VWAP from all-time high at 422.61. That could be problematic for sure. Those anchored VWAPs from like really pivotal levels have a tendency to be pretty powerful. And the past couple times it's come into it, I mean, early on there was a reaction, and then in here in February of this year, it wasn't as strong of a reaction. And then in March of this year, it was even less strong of a reaction. We gained it, tried to hold it, and then ultimately failed it. So it would be interesting to see price come in here and actually react proper to it. Whether or not it will, I don't know. But it's interesting to see that it's coming up into it. I'm curious to know where it is on the Qs. Yeah, so the Qs, it's at 336. IWM, it's at 199, 200, big psychological level on IWM. I mean, IWM is leading the pack, man, is what it looks like to me. IWM has gained all of that stuff. It gained that distribution. It's gained that next high that we're looking for Qs to come up to, that we're looking for SPY to come up to, and now it's coming into kind of where it failed, right in here. So I don't know.
Yeah, and I mean,
go ahead.
Go ahead.
No, you.
I was just gonna say, to me, that's not that shocking, just considering, you know, for even while we were, you know, making new all-time highs and stuff, the IWM, the Russell, was kind of lagging, not hanging out. So you got if you get that reversion to mean, right, the indice that was doing the worst, now that the markets are turning around, maybe that picks up and is doing a little bit better. And I'd be curious, something like, as far as the sector ETF, something like XBI, where biotech has been a huge laggard compared to the other sectors, if maybe similar to the IWM, and I'm looking at that XBI right now, and we're up more than 37% from those lows in June. So it does look like XBI is getting maybe a little bit of a bigger bounce than some of the other industry ETFs or sector ETFs.
It's coming into a huge level here. I mean, this 95, 91, 96 bucks, let's call it. This is a big level. So we really, if you're bullish, you really want to see them gain this. You want to see them get up above it, trading above it. And then what you would probably expect is if they're able to get up into this and above it, it's probably going to correct pretty decent and come back into, you know, something that it hadn't really done before. Again, I talk about this sort of stuff all the time on my stream. You know, it's super simple to see. You have a top, you gain it, you come back, you test it, you go higher, right? Same thing here. You have a top, you gain it, you come back, test it, you go higher. So like, what haven't we done? It's that we haven't come back into 85. So if we're able to get up above, maybe $100 psychological is a magnet. I don't really know. It looks like it's kind of failing right now. It looks like it failed on Monday and it's coming back and retesting. So it wouldn't really shock me to see this come down into here. But this kind of sets up a bit of an expectation. If they can't get up and over this, we might be making quite another leg lower. We'll just have to wait and see.
Yeah, and I mean, it was just like what we were talking about. I guess maybe not well, I mean, you kind of got that double bottom down there, but, you know, I'd be curious, like, how much of XBI or that leg up, that one where you've got your cursor over, or sorry, I can't see it. No, over to the right a little bit. That last leg, I wonder, like, where monkeypox is here into that, and if the monkeypox news catalyst is also, you know, coinciding with a different important level on the chart, like we were talking about.
Yeah, for sure. I'm not really sure when that headline came out, but it would definitely be something to look at.
Yeah, definitely. And I mean, so I guess with this, while we're looking at the chart, if we do clear that, you know, bar that you've got laid across, like would that be consider that bullish? Like, it looks like we're still under that moving average.
Yeah. So here's your anchored VWAP from, at least, I don't know if this is all-time high, but this is the February 2021 high. And clearly it's been a key level for a long time. I would be, if I'm bullish on XBI, you need to make new highs, right? Like, that's what you need for a bullish trend. You need higher highs, you need higher lows. And on the shorter term time frame, you have it, right? You make a new high, you come back, test, and then you make another new high. You kind of test, and then you make another new high. So they could come back and test $85, somewhere thereabouts. They haven't done it really yet, before they go and they make a new high. Or they could just clean run it through a new high. What I would be fearful of, if I were bullish, I would be fearful of not making a new high here and then coming back and then losing this low. If they lose this low right here, this is August 2nd low, maybe they come back into this anchored VWAP. And, who knows how quickly this could happen. This could take a long time. This anchored VWAP could definitely gain quite a bit from here. It's all about how fast it happens, right? But if they were to lose this kind of really what I would call a pivotal low in the trend, if they lose this, meaning they make a new low against this low here, that would set up the expectation that you would get a bounce and it would fail. That doesn't necessarily mean that it will. right? But
So where's this idea come from to weight the price action off the bottom?
what do you mean?
Like that moving average, that the bar on the blue bar, yeah, that one.
Yeah, so this is an anchored VWAP from the low.
Okay.
So I don't really use too many moving averages personally in my own trading. I mean, I like to know where they are because I know that lots of traders like to use them, but ultimately they're lagging indicators. And because I'm more of a price action guy, I am just specifically focused on: are we making highs? Are we gaining highs? Are we losing highs? Are we holding lows? Are we losing lows? So the very bare bone basic is, you had your low in May, you came down, you tested it, and you held it. And so because you held it, you went and you made a new high. This was your high previously, right? Your high on June 8th. You pulled back to the low, you held it, so you made a new high. That's what we did. You come back and you back test. You can back test kind of anywhere within the move that you just made. It's going to be based off of kind of a handful of different factors, but since it kind of based throughout most of June, it only back tested kind of in a shallow way, because there was just a lot of support down here, right? There were a lot of buyers, and so it held,
Yeah.
and they made a new high, right? Because they held a higher low against this one. You could even say they held a higher low against right here if you wanted to. I wouldn't call it necessarily that, but it's there. And then, so you make a new high, you come back, you test, you make a higher low. You make a new high, you come back, test, you hold the higher low, you make a new high, right? Very, very basic stuff. As long as you keep on holding those higher lows, you're probably going to be making new higher highs. Well, if you take that and you zoom out, we include now, because we were just kind of starting from this low, right? Well, now we talk about this section of the trend right here, right? Because this is really now the big piece that we're looking at, because this is where price is within. So this is the next high that we're looking at to get above. Well, what do we do? As of Monday, we did not get above it. Is that a fundamental change in trend? It could be. It's not necessarily, but it certainly could be. So we just have to watch and see. Does price fail and go lower here? If it does, that's not necessarily bad. We would expect a reaction. We would expect a reaction here because these are really important highs. So we would expect a reaction. A bullish person really wants to see price trade above and hold above. But maybe a more realistic person expects a reaction and maybe even expects initially a failure. Since we haven't come back in really to test where we came from, it is possible we could come back and test. And that's why it's important to me that we hold this low. If we hold this low and we don't get below it, that means that we're staying in trend. So if we get below it, what we could see, it is possible, and market makers love to do this. Market makers love to look at these levels, just like we were talking about earlier with coming into highs and doing a fake out. They come into the high and make a new high and then sell it off immediately. They could come wick through this low. I kind of would be looking for them to close below it. If they close below it on a daily, then that would give me a little bit more confidence that, yeah, okay, we made a new low. And then that would set up the expectation that at some point we're going to come back, we're going to test the old high, and we're probably going to fail it. Again, anything can happen, but that's just generally speaking how price action works. If you keep making higher lows, you keep making higher highs, the tendency is to keep on doing so. And if you fail at some point, then the expectation is that the trend is now adjusting. But again, also, if you fail at this level, if you make a new low, then you're at exhaustion risk, right? You're at exhaustion risk. The sell-off is at exhaustion risk. And so what naturally will happen is price will bounce off of a new low just the same way it rejects after it makes a new high. You hit exhaustion risk. You have a bunch of people who are long with stops just below this low. They all get taken out. Now we have no more sellers, right? We have only buyers essentially. And so price will rally.
Yeah, I mean, I love how when you're looking at the price action, you're like, I'm not gonna, anything can happen. I'm not gonna make any like long predictions. I'm just gonna watch the price and see what the price tells me. I feel like that's if you're out there looking at charts, if you're out there looking at, technical analysis, that's how you have to be. You can't buy into essentially a certain pattern because then if that pattern if the stock's not going toward that pattern, you're gonna like still think it. You just have to remain open minded and see where the chart's leading you.
Yeah, and let it all happen. Don't assume that anything is going to happen. Just let it happen. If it gains, if it gains, all right, then I have my plan for that gain. I know that if it gains, that's setting up the expectation that it's probably going to pull back. If it makes a new high, it's probably going to pull back. Let's go down to our lower time frames and start looking for failures. Because, just the same way that I can see this, that I'm looking for this on the daily, like to determine the bigger overarching trend, you can go down to an hourly or 15-minute, whatever hour or whatever time frame it is that you trade, and you might be able to see something else. On the hourly, what do we have? Here's your high. Well, here's a lower high. Here's your low. You just put in a bunch of lower lows, and now you might be putting in a lower high. So you might be getting into that new trend now. If you make a new high against either of these, then what does that suggest? That suggests the opposite, right? It's just about kind of knowing those kind of specifics about trend and then being prepared either way. There's a bunch of different trades you could potentially take. Just let price action tell you what trade to take.
Yeah, 100%. Like I said, I love that mindset. All right, Jason Krutzky from TrendSpider. Jason, you want to tell folks where they can find more from you?
Yeah, for sure. Twitter at Krutzky Trades, and I'm super available. If anybody has any questions for me about TrendSpider or about anything, happy to answer any questions that you have. Whenever, just hit me up. I host the TrendSpider Twitter Spaces on Tuesday nights, 8 p.m. Eastern. I am live on TrendSpider TV on YouTube on Mondays and Wednesdays, 2:30 to 4:30 Eastern. So I'll be live today for a couple of hours here in about 2 hours. And then Thursday nights, I host the live charting show. We've got Jack from Alpha Charts 365 tomorrow night, 8 p.m. Eastern. So that's where you can find me. I'm always around, always happy to assist with any questions anybody has about TrendSpider. So hit me up.
Hell yeah, Jason. Well, thanks for coming on the show. Like you said, check out TrendSpider. Give Jason a follow. Did I just call you Jake on accident? I don't know. Give Jason a follow on Twitter. You've got his handle right there. Always a pleasure to get you on, man.
Likewise, dude. Thank you for having me.
Of course. Talk soon.
Bye-bye.
All right, guys, that was Jason Krutzky at Krutzky Trades on Twitter. Go ahead and give him a follow. Like Jason said, he's doing some of his own streaming, so check him out there as well. And as always, if you want to check out TrendSpider, use the code BZ25 for 25% off. All right, y'all, let's keep it ticking. I do see our next guest hanging out in the background. So without further ado, let's bring on my good friend, Mr. Nicholas Brown, hailing from the great city of Pittsburgh, Pennsylvania. Without further ado, Nick Brown on the street. All right. Nicholas, how you doing?
I'm good. How are you?
Did I get that right? I know it's either Pittsburgh or Philly, right?
It's Pittsburgh. No, you're correct.
Hell yeah. I knew I got that right. All right, man. How's your week been going? How's your day been going?
Good. It has been a busy one. We got a lot of stats. I mean, I have like 3 pages of notes here and just in a notebook that I compile every day, trying to remember stuff. Got CPI stuff going on. Got VIX news. Got some market stats from Bespoke Invest. It's been a busy day so far. And getting up late didn't help a lot.
We had to get up early this morning for that CPI. So what were your expectations heading into the morning?
Okay, so when I got up at like 7:30, which is very late for me. Checked the futures, very somewhat muted, and then as soon as the number hit, we saw a big jump in futures and saw the 10-year note yield, and we saw yields come crashing down. We saw the dollar plunging, we saw the VIX plunging. It was a very overall right now, I guess people are taking it as a sign of relief.
Yeah, I mean, and we saw that kind of yesterday too with in the afternoon, it seemed like trading kind of slowed down because, I mean, if you think about it, like everyone's just kind of like, you got to wait for the CPI report. So everyone was kind of hanging out, just doing nothing, waiting. So this morning, like you said, the futures were pretty quiet. And then, right at 8:30, of course, you got that huge leg up. And now, let me go ahead and pull up my charts here. Let me pull up the Qs because I was looking earlier to see. So it looks like we tested and failed to break above no, we did break above the highs from this morning right at 8:30, but barely, and now have been selling off from there a little bit, going from about 326 on the Qs down to 324. So maybe some people taking some profits here. I don't really know, but either way, it's still a very strong day overall for the markets.
Yes, and want to talk about the Fed Fund futures because that's always one to talk about what September is in store for us. At last check, it looks like 50 for September. From what I'm gathering from the data that I'm seeing, it looks like we're going to go 50 in September. We still have some people saying 75 is not off the table. We had some Fed speakers over the weekend and even today saying inflation is not slowing. So we're going to look for that. I think they can either go 50 or 75. I really don't think one inflation report for me is going to do it for slowing inflation. I really think we need to see multiple.
Yeah, and so this is from the CME watch tool here, like you mentioned. 50 is kind of the consensus estimate here. You can see the CME group is giving a 62.5% likelihood for 50, which is, it's saying that's the favorite, but it's still giving a 37.5% chance of 75. So if you were thinking like 75 is completely off the table, well, 37.5%, that's pretty, significant. I mean, that's more than one in every three, right? So, right now, and we can see how the odds have changed since yesterday. So this is 1 day ago. It was the opposite. It was the consensus. It was 68% that we were going to get 75. Now it's 62% that we're going to get 50. So CME calculates this based off of Fed future or some sort of futures markets. I believe that they have. I guess we can look into the methodology right here, but I don't want to pretend to understand exactly how they calculate this. What I do know is it's a pretty good tool to measure the probability of the next rate hike.
Yes, but something interesting in the CPI report, even though July CPI was unchanged, estimate was for 0.2%. Ex-food and energy rose 0.3%. Estimate was for 0.5%. Year over year for ex-food and energy, or year over year for the CPI was 8.5%. Estimate was for 8.7. Previously it was 9.1%. Ex-food and energy came in at 5.9% year over year. Estimate was for 6.1% year over year. Something to note, though, that food actually went up 0.1% at last check. So that was interesting. Food, all the other sectors came down a little bit, but food actually went up a little bit.
Yeah, and that's interesting to me because I do know we are starting to see food prices come down, but to me, I think maybe we're not going to see that reflected until maybe the next month's CPI report, the food coming down. And let me pull up. I do have a data here from Bloomberg. I just got to figure out how exactly to pull this up. And then also, Nick, so let's go over some other news outside of the CPI. That's obviously the biggest news. But, of course, we also had yesterday, after the close, Coinbase report earnings. Did you take any look at that?
Yes. So they missed EPS. They missed on revenue. There were some price target changes that were relatively interesting. Piper Sandler goes from 120 to 115. JP Morgan actually raises their price target. They go from 61 to 64. Oppenheimer goes from 90 to 107. Goldman goes from 45 to 51. And it looks like BTIG cut from 290 to 220.
Interesting. And sorry, I'm just going to pull this up. This is from looks like a Bloomberg chart. So I'm just going to say Bloomberg.
Yeah, it says Bloomberg on the bottom. Yeah, that's a Bloomberg chart.
Yeah, I know it. Yeah, I can. You can always tell a Bloomberg chart. But yeah, you can see. So up the top line we've got here is the UN Food and Ag World Price Index. You can see on the very top right here. Oh wait, you can't see my cursor on the screen, but trust me, my cursor is there. It's right here where we start to come down, and then the bottom line is showing the month over month price. So you can see that for the first time, or at least for the first time since '08. More than 5% month over month drop in food prices. So maybe not in June, we didn't maybe not in July. We were going to see the effect of those food prices falling, but maybe in August when we get that, when we get August CPI in September, maybe we'll start to see those food prices falling.
Yes, and tomorrow we get the producer price index, so we're going to be eager to hear if it's the same thing regarding CPI, if it comes in less or comes in more. So we're going to be watching that. But something to note here that I was looking at earlier this morning, WTI, as I said yesterday in the chat, gas prices come down. Half of the United States is seeing the average below $4. Gas Buddy this morning or this afternoon currently is at $3.97. We continue to see gas prices continue to come down. Brian Deese, the White House economic advisor, was making comments this morning on the wire. He's saying gas prices will continue to come down. The inflation report is a good sign. He says that he need to help bring prices down to sustain progress. And we've been echoing comments from Fed leaders saying that 1 month isn't just going to do it.
Yeah, and I mean, I think that's what a lot of people are looking at right now. To you, I mean, what's from a macro perspective? Like what numbers? You mentioned the PCE. Is there anything else outside of inflation, CPI, you're really concerned or worried about or interested in right now?
I'm interested in the GDP. I'm interested in jobs report, but I'm also interested in earnings. There was a new report out just moments ago. I literally just tweeted moments ago from Piper Sandler. It's saying slowing inflation seen as a problem for companies. And one of the quote here is that Piper Sandler says there are still inflationary forces likely to keep the Fed hawkish, but it says in order to get and keep inflation down, we and the Fed need to see a continued slowdown, recession to build slack and squeeze out price pressure. So really, just because inflation is coming down, they're arguing really isn't going to help businesses overall.
Yeah, and I mean, we will see that too. People talk about what problems arise when you have, very fast deflation happening. You're seeing companies coming out and saying that with earnings, saying, hey, yeah, look, if we were selling, especially let's take gas companies, for example. If they were saying, hey, yeah, last quarter we were selling gas for $5 a gallon. We made a lot of money. Now we're only selling it for $4. What do you think that's going to do to earnings? What do you think that's going to do to the company's, revenue if their main and only product that they're selling is now down 20% from where they were selling it a month ago?
No, that's a big problem. And we're going to have to really see how gas companies and how the companies and oil companies are holding up whenever they report earnings with gas prices coming down. We're going to have to see how that really impacts revenue. Do they still beat the revenue? How high the bar is going to be set? Is the bar low? We're really going to have to watch expectations. And look, I mean, we continue to get warnings from NVIDIA, Micron, from the semiconductor area saying, we're not sure if we're going to be able to meet the revenues. We're not going to be able to be sure if we meet expectations. And we still have job layoffs going on. So even though inflation is coming down, we still have some issues that still need to be under control.
Yeah. So again, we'll be having to monitor that, the deflation, what types of problems that could potentially lead to. Other big news yesterday, of course, that came after the market, Nick. You know what I'm talking about? Well, yeah, Twitter.
Yeah, so Twitter's Elon Musk selling more shares. And there was a new note from Dan Ives this morning of Wedbush here, just trying to find it in my notes. Wedbush actually raises their price target from 30 to 50, and they give 4 scenarios of what may happen. So out of the 4 scenarios, they go, 1, the deal ends, Musk pays breakup fee and walks. That's very low in the street expectations. 2, specific performance upheld by court. Musk needs to buy Twitter for $44 billion. That's the high likelihood. 3, Musk needs to settle or pay significant damages to Twitter with street ranges with street ranges from 5 bill to 10 bill, based on the court ruling trial and the trajectory. That's also a high right now, and very low. Musk wins in deal, pays nothing, no breakup fee, anything. That's very low. So we have some very high, some very low expectations here from Wedbush. They maintain the neutral rating, but they up their target from 30 to 50, saying that the deal will likely get done.
Yeah, and I mean with those different scenarios, when we pull up Twitter's chart here, you can see on a daily we're getting a nice little move up here. We're well off of our lows. If we got down to $30, this is when it looked like, by all means, the deal was going to be called off or whatever. And then from here, you had the news catalyst, essentially the Delaware court saying, no, okay, we're going to allow Twitter to expedite this court process. It's just a lot of things coming out that sound like, oh, maybe it's not going to be as easy for Elon to just walk away from this with no penalty, which is what a lot of people had thought. So, wait, sorry, I don't know who, sorry, I was checking up the comment. Jay Rice, I don't know who you're talking about. This guy works for the White House saying gas more than doubles, drops 50 cents, and they pat themselves on the back. I mean, look, it doesn't matter who you are or like what side you are politically. If people that are in office, that's what they do, is they make the things that make them look good. It's like when it's like after the COVID crash. So when the markets crash, right here, let me just pull up the SPY chart. And sorry, this is kind of a little tangent. I just don't know. I'm curious who Jay's referring to there, who he's saying works for the White House.
Maybe, I'm thinking.
Oh, maybe. Was it something you said about gas? So here was my point. Here was my point about, so during COVID, when we had the market crash here, you had the S&P fall from 340 down to lows of like 215 or whatever. The economy basically grinded to a halt. That quarter following that, we posted the best quarter of GDP growth ever, right? Which just makes sense, because if you halt the economy to essentially zero, and then maybe you're not back up to full-fledged operations the next quarter, but you start back up again, right? That month over, but that GDP growth quarter over quarter is going to be pretty significant. And Trump and whoever's in the White House at the time was saying, hey, we just had the best GDP, and it's like, that was from a pandemic. And it's the same thing with Biden. I mean, when Biden says we hired the most, it's like, right? Like, we're coming out of a pandemic. Like, some things, right, you can take credit for, other things you can't, but that's just how politicians are. So of course the administration is going to try to take credit for gas coming down. What do you expect them? Why wouldn't they, when they were the ones blamed for gas going up, right? So if you're going to blame Biden for gas going up and now gas prices are falling, and you're going to say they can't try to make it sound good, I'm with you where I don't think it matters who's in office. Like, gas prices are going to do what they do, but of course they're going to try to make it sound like that. Like, that's what their job is. All right, sorry about that tangent, Nick. Let's get back to Twitter. Uh-oh. Looks like we lost Nick for a second. Let's give him a sec to hop back in. Yeah, like Shelly said, it's just politics as always, right? They're going to take things that, wasn't there doing and make it sound like it was, or vice versa, things that were there doing, saying it wasn't my fault, there was nothing we could do. Dark Brandon is having a great week. Yeah. That meme, the Dark Brandon memes, it's so funny because it was actually started as like leftists who don't like Joe Biden, right? Not like liberals, like Hillary Clinton, Joe Biden liberals, but like leftists that don't like Joe Biden started the Dark Brandon meme, making fun of the fact that like, oh, here's this old senile man that like can't really do much of anything. We're gonna basically making fun of like the memes people used to make with Trump, where he like would be like ascending from heaven and all this stuff. Like, they're basically making fun of it. And now, like, the actual liberals and like people in Joe Biden's camp are starting to use the Dark Brandon memes, his own aides and whatnot. And now it's like, all right, this is probably going to get pretty old pretty quickly. Ready. Maybe Nick just didn't. Mini vacation, agree with everything said here. Thanks, man. Smash the like, and follow me on Twitter. I'm on a Twitter hot streak right now, trying to get more followers. You know, I'm gonna do a better job of just posting my thoughts and stuff out there. I know crypto, the only saying, yeah, politics. I remember in 2001, then the war, gas skyrocketed, but since that time, we have gotten our oil connections back and seem to guess we can. Yeah, I don't really know exactly. I don't really know exactly. I wasn't really around or following the markets to know that move there. But I'm just talking about, like, you know, we're all here for the markets. We're all here for stocks. We're not here for politics. And right, like, we can point dirty politics out on both sides. That's just how they are. That's just how it is. So let's focus on what we can focus on. We'll focus on the markets. But yeah, I mean, S&P 500 right here at 418. I don't know if you guys remember, but back, let's see, here in April 2021, 420 was this super, super important number for SPY. And if you're out there laughing, like, oh, 420, haha, grow up. It's only slightly funny, okay? 420 jokes, only slightly funny. Grow up. But you can see here, right? I'm looking at the daily candles back in April 2021. So this is about a year and 4 months ago, 16 months ago. We were like trying and failing to break above 420. Maybe we hit it, you know, finally. And then finally on this day, May 7th, you got that candle up. We hit 422.82, rejected, came back down, came back up again, then started testing those levels again. Like this, the 420 level remained an important level for SPY for like months here. From when we got to highs of 416 was when people started calling it out. Even up here when we were at 425, people were still calling out the 420 level as support. And we broke through the support, came back up above it, ripped above, never really came back and tested it, got down to we did get down to 422 again, but then came back over. Fast forward to here, we came pretty well below that 420 level, down to 360, now right back up to it. So we're right back up to where we were in April 2021, getting close to that 420 level. But let's see what we did there. Let's zoom in and see kind of what that price action looked like heading into it, because that's where we're at right now. I'm not saying it's going to look the exact same. It's obviously not. The markets are different. The companies are different. But, you know, looks like we kind of traded sideways around there, broke above, rejected, and then came back. And I wouldn't be that surprised to see something similar like that happen here, right? Trading sideways, break above, break down maybe. This is what we were talking about with Jason, right? Right when people are seeing that we're up every single day for 3 straight months, you're going to buy it in, you're going to buy it here, come down, whatever. Fine. You know, try to think of that Max Payne situation. Yeah, Zen bullish. I'm evenly hating all sides. That's basically where I'm at too, right? Because here's where I stand, and it's not just about politics or investing. It's really about anything, right? And I feel like, I don't know if this wasn't the case back in the day, or if this is just human nature, but there seems to be this idea, right, that if you're, you know, like if you're in an in-group, if you're part of an in-group, right? So if you're, say, you're an Apple investor, right? That means you're in the group of Apple investors. Now you're going to feel more connected to Apple, whatever. There's this like idea that if you're an Apple investor, whatever, you don't like criticize. And I think it's the opposite, right? Like if I'm a fan of, or if I'm a supporter of a politician, like I want to be critical of them. Like I want them to get better. That's why I saw people talking about like, why'd you say this about that stock? It's like, I own that stock. I said that because I want the company to be better, because I have a problem with how they're running the company. And I want them to be better because I'm invested in it, because I own the stock. And that's how we should all be, because we're all you know, with politicians, it's like people will be, you know, like, oh, how could you say that, you know, about whoever. But like if you're Max Payne is a theory with concrete numbers. Let's do that. Oh, I'm getting the signal from Nick Brown that he's ready to come back on. Cool. But yeah, basically that's my point, is like, hey, look, like you can be critical of people you support. You should be critical of both sides, because otherwise you're going to be completely blinded by, you know, loving one side, hating one side. And it's like, that's not how it works, right? You're just getting swept up then in that. So I'm with you Zen bullish, where I'm equally critical of both sides, if not more critical of the side that I side with the more, right? And I think that's how it should be. Like, I think you should be more critical of the side you're on. That's going to get you a better place. I'm Tim Cook's husband. Congrats, OP. Send me some Venmo. Send me some Venmo. All right, guys. Nick alert. It is time for Nick Brown to come back on the stream. We're going to give him our special intro again just because. All righty, Nick. How we doing?
Sorry about that. I don't know. Soon before the glitch happened, because my screen just went blank, I heard a big, loud bang right outside my window, and all of a sudden, everything just went. I had a black screen. The internet went out. We're rebooted, but we're back.
Yeah, hell yeah. Well, glad to have you back. No worries at all. We have technical issues on the show all the time. Twitter, we were talking about Twitter, so let's go back to that. And then we've mainly been having this discussion about the sale yesterday of Elon Musk selling Tesla shares for Twitter. We've been mainly talking about it from the Twitter perspective, and you laid out those different scenarios that different banks kind of laid out, saying, okay, if the deal goes this way, here's our price target for the stock. If the deal goes this way, this is what we anticipate happening. Do you think this has any implications for Tesla stock? I mean, like, obviously, a lot of times when you see a CEO sell, you get a negative reaction, and then the stock recovers from there. I mean, do you see this having any impact on Tesla stock, or is it mainly Twitter's?
I think it's mainly Twitter's, but I also think, too, to a certain extent, to a certain point here, that the reason why he's selling some shares is just because some equity, who knows what's going to happen? Maybe because some equity is going to disappear or whatever, and he needs some money. Instead of doing like emergency selling, he's trying to sell now to plan ahead to see what happens with the Twitter court, because really nobody knows the outcome. I mean, we do to some extent know what the outcome may be, that Twitter is going, or the judge is going to hold Elon Musk to the decision from what he originally wanted to buy Twitter, but nobody really knows. Depends on the facts, depends on what they lay out, what both sides lay out, what Musk lays out regarding bots, what Twitter lays out regarding Musk's term and agreement. Nobody really knows. So I think this is just some kind of like some pre-selling here for some pre-selling stock, just in case that he does have to buy Twitter and he needs something, he needs some cash. So this was, instead of just all of a sudden doing this like out of the blue, hurrying up and selling, emergency selling, he's getting ready, I think. Yeah.
Real quick, sorry, just know I don't want to see a lot of arguing about politics in the chat. It's not what we're here for. We're here for stocks. We're here for the market. We can all agree, there's ugly politics on both sides. Let's try to put it aside, focus on the markets. Yeah, and I agree with you, Nick. I think here the news, when I saw the headline, I was thinking initially of it from the Tesla perspective, like, oh, here's Elon selling Tesla shares again, which, of course, he sold some 4 months ago in April and said he was done then. But, then the more you look into the story, okay, this has more of an implication for Twitter's stock than Tesla's.
Well, yeah, to pivot to, because we were going back and forth here, GDP, there was an alert here. The Atlanta Fed GDP Q3 is now predicting 2.5%. I know this is very volatile, but just wanted to throw this out here. Previous was 1.4%. So we're seeing a lot of movement everywhere. But going back to the Twitter and Tesla story, I really think Twitter, I don't know, the stock just collapsed and it's been on a tear, but we've seen it was back at near 40-ish. So I could say that he could buy Twitter, and I also could say that he may not buy Twitter. It all depends what the judge sees in her favor, depending on the facts, going back to what they lay out, because Musk may not be sharing things here on Twitter, sharing what he is ready to share in court, and maybe Twitter too. So we really have to see, we'll really have to focus on what the court, on what each day is going to lay out, if they're going to, spend time on a specific agreement, specific topic on each day. So we're really going to have to see what evidence flows out from that.
Yeah, and are we going to get any like news from the actual court case? Do you know how that works, or like what is the timeline looking on this?
Yeah, see, so the only thing we know is the The trial is from October 17th through the 21st. The Chancery Daily last time, whenever they had the trial via Zoom, the Chancery Daily was tweeting out real-time headlines that, again, nobody really knew about this account until this happened, and so I shared it. Many people have been following it, so I don't know. We really don't know if we're going to have court reporters in it. If they're going to only be allowed outside, what's going to happen. But we do know for a fact, I think for a fact, is the Chancery Daily account, who's ever running that account will probably be tweeting live headlines, live news, live whatever from the trial.
Yeah. And sorry, I see someone in the chat asking if you have a Twitter. I'm going to drop that in the chat. News_by_Nick. I'm going to go ahead and drop that in the chat. Gotta give him a follow on Twitter. I know, Easy Mike. See what happens when you leave. All right, so let's see, Nick. Biggest stories of the day. We had CPI came in lower than expected. Markets absolutely ripping off that, giving us some confidence that maybe the Fed doesn't have to raise rates as quickly or as much as they initially thought. Two, of course, I mean, Coinbase earnings. I don't know how big of a news this is for the overall market. I think it's if you're really into crypto or if you're really into Coinbase, it's a big story. The report wasn't great, but like you can see on my screen, market doesn't care. Stock up 5% today. I think basically saying, hey, look, even though that past quarter wasn't great for Coinbase, right? We're all looking ahead in the market. So basically saying, okay, if inflation's not as bad, that's probably good for crypto if we're not raising rates as much. So I think looking forward here, you're seeing the bullish catalyst from the inflation standpoint for Coinbase outweigh the lackluster report from the previous quarter.
Yeah, but something interesting too. I was talking about the dollar plunging from Bespoke Invest, and I got this morning. The dollar index is on pace to close below the 50-day for the first time since February 17th. That would end the longest streak of closes above the 50-day since April of 2015.
Damn. Yeah, wow. That's pretty. Can you read that stat one more time?
Yeah. So the dollar index is on pace to close below the 50-day for the first time since February 17th. That would end the longest streak of closes above the 50-day since April of 2015.
Wow. Damn. That sounds bullish to me, right?
Yeah. I mean, we can even take it another leg further. The VIX. If the VIX closes below 20, will end. I can't even read my own handwriting. So the VIX. If the VIX closes below 20 today, it will end what it has been the 10th longest streak of the closes above 20, dating back to 1990, 90 trading days. The last streak of 90 or more trading days ended at 246 in February 2021, coming out of the pandemic. Before that, you have to go all the way back to 2012 to find another streak of 90-plus trading days. The longest streak of VIX closes above 20 was during the financial crisis, stretching 331 trading days from right before Lehman hit the skids in September 2008 all the way through December of 2009.
Wow. Nick coming in through with the data, with the nice facts. Love that. Love you coming prepared. Love you having your notes ready to go.
Wait, Aaron, we could take it a leg further.
Okay. All right, let's do it.
The S&P 500 has gapped up 1.5% or more on a CPI day just two other times since 1999. The first time was January 17th of 2001, plus 1.51%. In January 16th of 2009, plus 1.73%.
Do you know, was that with up 2.5 closing or just in general?
The only thing the tweet says is has gapped up. So I'm guessing, I think we're probably going to get another stat from close, but what I understand, this has gapped up. It could be closing. Nobody really knows, but it was just a stat that I said, I got to throw this in there. But no, only two other times since 1999, and how many CPI reports we've gotten?
Yeah, and you see stats like that, I feel like, a lot on Twitter, and it kind of makes it, to me, almost hard sometimes to cut through the noise. Because I remember, like, a few months ago, or maybe, like, 2 months ago, you'd see some of the, like, oh, this yield inverted the past 8 times, it's always been a recession, like, all these things. And then on the bullish side, there were a couple ones where like they were incredible. Like this is only, I think it was, I forget what day it was. It was one day in the last like month or so that was a very strong day. I think it was something like 98% of S&P 500 companies that day closed in the green, and you had to go back to the day after Christmas of like '08 or '09 to the last day that happened, and it was very significant because that day marked like the perfect bottom of the '07, '08 market. So it's like things like that that give you some, and it's the same thing we talked about earlier when people have like confirmation biases. Like you might see a stat like that and think, okay, that means, you know, we have to be bullish right now and we have to be going up. And then someone on the bearish side might find a stat that says, oh, the only time this has ever happened before, the markets came down 20, 30%. So yeah, like Shelly said in the chat, it's data's nice. It's how do we interpret it? But you know, I think if you're looking at all of the data right now comprehensively, you'd be silly right now to think that it's indicating anything bearish.
Right. And Bespoke Invest is like the best for these stats. I can even take another leg further. This looks to be the 21st gap up of 2% plus for the NASDAQ 100 since the start of 2020 and the 5th of 2022.
Wow. Yeah, and another guy who posts some good stats like that on Twitter is Ryan Dietrich, who was formerly with LPL, who I believe just made a career switch over to the Carson Group.
Yes. He posted something this morning about that. I think he posted something about CPI this morning.
Yeah. He posts some good things. Yeah. So okay. Also, back to the Tesla thing, including sales from a few months ago. Elon Musk has sold now $32 billion worth of Tesla in 10 months. That's a lot of money, Nick.
To us, yes, but to him, no.
Well, even to him, I mean, that's you know, say a fifth of his, you know, whatever you want to say it is. It's not nothing. What's his at? Chris is asking. It is news _ by Nick. I'll drop it in the chat, make it easy for you guys. But hey, while you're on Twitter, while you're giving him a follow, might as well give me a follow too, right? At Aaron5. I'll drop my Twitter in there as well.
But no, I really think tonight we're going to be watching Disney. I really think that's going to be the major because that's really going to set the tone for some streaming companies for as we gap up ahead. So I gathered some numbers here. This was from the Bloomberg consensus. I got this off of Yahoo. EPS tonight, 96 cents. Rev, 21 billion. Disney Plus net ads, 10 million. Parks and like consumer and exploration, you know, other things, 1.78 billion. For me, what I'm watching the parks to see how the reopening trade is going, and then I'm watching the streaming number too. So to see is streaming really is Disney Plus and streaming still up there, or did we scale back a little bit and more people are returning to the parks? So really going to be watching that tonight because I really think that's going to move a lot of other stocks. And if you have BenZinga Pro, guys, after Disney reports, there's always some headlines that flow out saying other stocks are flowing in sympathy with other stocks, with other companies. So that is why you should have a BenZinga Pro for that and many other reasons.
Hell yeah, of course. And that's what I use basically every day on the show. You can see here I've got Walt Disney Company, the common stock, pulled up New York Stock Exchange, ticker DIS. I believe most people probably know that. But, you know, up 3.2% today into the earnings, so maybe some people expecting it to be pretty strong. But one of the cool things that I like about BenZinga Pro is you got the chart right here. I can click over to overview if I want to get an idea of the fundamentals. See, they've got a forward PE of 20. Okay. And I've gotten this question too, because Disney's PE looks out of whack. Like it looks pretty expensive. Oh, you see a 73 PE. A lot of this is from different acquisitions. So the forward PE, especially for Disney right now, I would say would be the more number you want to look at. And then you got your price to sales. You can go into, you know, earnings, revenue, balance sheet, all your fundamentals here, charts. So it doesn't matter if you're a fundamental investor, if you're a chart trader, if you're like me, who's kind of somewhere in the middle. I like to look at charts and fundamentals. We've got everything. And on the news side, which is I think where the strong suit is most on BenZinga Pro, that's our core product, right? Our news. Our news feed, like with Disney right here, maybe you don't want to have to Google Disney and see why it's up, right? We've got this why is it moving right here. Shares of several companies in the broader communication, entertainment, and media industry are trading higher amid overall market strength as better than expected CPI data lifted market sentiment and alleviated inflation concerns. So now you know exactly why Disney is up. You know when they report earnings, you know their fundamentals, you know their chart. It's all in one place. You don't have to go to 8 different websites to find all these different things. And of course, you know, it's a BenZinga product. We're on a BenZinga show. I work for BenZinga. I'm trying to explain to you guys why it's so great, but it's like outside of that, it's honestly like there aren't a lot of places, you know, right? Like if you got a Bloomberg terminal, sure, but most people don't have $25,000 a year or whatever to spend on it. So, you know, to be able to try this for a 2-week free trial and $100 a month after that is nothing compared to the terminal.
No, and I mean, look, BenZinga Pro is the best. And to add to the Disney play here, I think a lot of stocks, from what I'm understanding, from what I'm seeing here, a lot of stocks that have been beaten up are rallying into the print, but then falling after the print.
Yeah. Well, and it's just been hard, I think, because like, and I've made this point again, like you can be right about the quarter, then be wrong about the reaction. I mean, right. Like think about someone who maybe loaded up on a bunch of Coinbase puts yesterday. You see the quarter and you're like, hey, that looks pretty terrible, right? They lost over $1 billion last quarter. The revenue came in way lower than expected. Are your puts printing? No, you lost a lot of money, you know. So it's like just because you're on the right track in terms of the earnings doesn't mean the reaction is going to have to be that way.
Right, and I think as we gear up, we get Rivian earnings tomorrow after the bell. That's going to be one to watch because, you know, some of these low EV companies that are trying to get in business, that are trying to produce electric cars, that are trying to produce electric trucks or whatever they're trying to produce, it's very hard if you don't have a lot of cash. And I was just reading a note here from Dan Ives of Wedbush. He says that he thinks that they're going to be heading in the right direction after a bumpy road. Again, the supply chain is really putting a lot of pressure on these small companies. Don't get me wrong, they're still putting pressure on Tesla, GM, on these companies that have a lot of money, but especially on the companies that don't have a lot of money, Rivian, Lucid, those type of small companies. It's really making it extremely hard for them to produce vehicles and to get a good sense of the road, to get a good amount of people going to buy their cars because of the supply chain. I mean, producing is one of the best things you can do because that's how you get people to get your product. You can buy this certain vehicle, but if you're not producing and you're not saying, okay, I have this ready to go for this amount of people, we can start sending them out, it's really going to make you hard to be a good company and to get a lot of people attracted to them.
I agree with everything you said there. All right, Nick. Well, it is 12:58, which means or Jay Rice is saying that's not true. Most names in this quarter were selling off into earnings and got bought. Those are the biggest names, but I think, you know, if you go across the board, and I would need to look at that, I think a lot, like Nick is saying, a lot of these names, like Disney today, have been running up, and some other companies as well. So, again, I mean, I think from the earnings standpoint across the board, numbers were better than expected this quarter, and I expect that to continue with Disney. If I had to play it either side, I'd play it on the long side. I'm not planning on buying any calls or any puts or anything like that. But earnings so far been on the good side. Of course, we touched on if we do have deflation across the board, what that means for earnings going forward. But Nick, always a pleasure to get you on, man, especially on a day like today where we had so many different news headlines.
No, thank you. And I mean, I'm just probably going to keep adding to the notebook. So if you guys want more stats, hey, I'll come back on and just share the stats. Bespoke Invest. I mean, I'm not a subscriber, but I do follow them on Twitter because they do put those tweets out on Twitter. And they're really good stats that not many people know. And if you tell one of your friends that, you'll probably blow them away.
Yeah, you love that. Always got to have good tidbits at your fingertips to share with people. All right, Nick, well, enjoy the rest of your Wednesday. Looking forward to get you on again soon. Again, everyone, go follow Nick on Twitter, News by Nick. And then while you're there, give me a follow, too, at AaronBree5. That will be a wrap for us today. Nick, thank you again for hopping on with us.
Thank you. Thanks for having me.
Of course. All right, guys. Producer AB here, signing off. Until tomorrow. Love you guys. Also, quick show note, there will be no show next Wednesday. I'll be golfing.
This